It was December 26, 2025. The stock exchanges had shut down for the holiday, leaving the world in a rare hush. No frantic bids, no crashing sells, just the glow of a single number on my screen. $71.91. That was the closing price for silver, frozen like a snapshot from a dream. For weeks, the market had been a whirlwind of ups and downs, but now, in this quiet moment, I stepped back. I looked beyond the daily chaos out to the horizon, and what I saw there? It was a mix of terror and thrill, a price that seemed impossible, yet inevitable. $71 for silver felt wrong to many, like a glitch in the system, a bubble waiting to burst. I remember staring at my portfolio that Christmas morning, feeling a wave of dizziness. The price had climbed so high, surely it had to fall. I'd missed the boat, or worse, I was teetering on the edge of a cliff. But as I sipped my coffee, I realized something profound. My instincts were deceiving me. My mind was tuned to an old world, one where silver lingered at $15 or $20 an ounce. That era was gone. The $71 I saw wasn't expensive. It was a steal, one of the cheapest assets in history when you peeled back the layers. Over the next hour, or in this telling, the pages ahead, we'll unpack the silver market's hidden history. We'll journey to 1980, revisit 2011, and dissect the dollar's fading power. By the end, you'll see why $71 isn't a peak, it's the foundation. This isn't a repeat of old squeezes. It's a massive shift, a rethinking of value itself. We're not in a bubble, we're witnessing the world realign. To grasp the future, we must first revisit the past, starting with the winter of 1979. The late 1970s were a storm of uncertainty. Inflation raged like wildfire, the dollar weakened under siege, oil prices skyrocketed, and faith in leaders hit rock bottom. Sound like today? History echoes, doesn't it? In that turmoil, three ambitious siblings from Texas, let's call them the resource rebels, saw opportunity. They were energy magnates, savvy in tangible wealth. They eyed the dollar, freshly untethered from gold since 1971, and called it what it was, a fragile promise. To shield their fortune, they turned to silver, not stocks, not bonds, but the metal itself. They scooped up bars, contracts, even mining operations. Their hoard grew massive, over 100 million ounces in physical form and far more in futures. Their aggressive buying sparked a chain reaction. Prices climbed, drawing in everyday folks, shop owners, drivers, even casual traders. From $6 in early 1979, silver soared to nearly $50 by January 1980. $50. That figure lingers like a shadow over silver's story. For 45 years, it's been the unbreakable barrier, the summit no one could scale again. Rallies always faltered with whispers of, "Remember 1980, the fall is coming?" And fall it did. Regulators stepped in, hiking margins, capping positions, forcing sales. From $50 to $10 in months, fortunes vanished, leaving scars that shaped markets for decades. But here's the overlooked truth. 1980 is $50 isn't today, is 50. Currency is not static. Inflation warps it yearly. In 1980, $50 bought groceries for a week, gas for multiple fill-ups, or a fine outfit. Now, barely a meal or a tank. Comparing raw numbers is a mistake. We must adjust for the dollar's erosion. Using the official Consumer Price Index, CPI, flawed as it is, often downplaying inflation, the math is eye-opening. $1 from 1980 equals about $3.50 today. Multiply $50 by 3.5, 175. That's the adjusted peak silver needs to match its old buying power. At $71.91, we're not at a high. We're 60% below it, a deep discount. If any stock or property traded this low, crowds would rush in. But silver's haunted past breeds fear, creating your edge. Chapter 3. The shifting sands of supply and demand. This isn't just about numbers. The silver world has transformed since 1980. Back then, Earth's population was 4.4 billion. Now, over 8 billion. Double the mouths to feed, hands to hold gadgets, lives demanding energy. Yet, silver production hasn't doubled. It's stalled for a decade. Per person, there's half the silver available compared to that era's peak. And it's not just more people, it's what we do. In 1980, silver's big role was in photography, film, development, all silver dependent. But it was flexible. If prices spiked, folks took fewer photos or prices rose on film. Plus, recycling was easy. Labs reclaimed silver from chemicals, flooding supply back in. Fast forward to 2025, photography's digital, but silver powers essentials, solar panels, EVs, 5G, AI centers. These aren't optional, they're mandated by green policies. Silver's cost in a panel is tiny, so even at $100, production continues. Governments demand it for climate goals, no stopping. And unlike 1980, today's uses consume silver. It's dispersed in tiny amounts, impossible to recycle economically. No scrap surge to cap prices. The old safety net is gone. 1980's rally was leverage-fueled speculation. Today's? A genuine shortage. Buyers are giants, banks, funds, factories like those building phones or cars. They pay cash, take delivery, no margin calls. Deficits have piled up since 2021, vaults emptying. 71.91 isn't hype, it's the market admitting scarcity. Compared to 2011's $49 peak, that was money printing fear post-2008. But solar and EVs were nascent. When printing slowed, silver fell. Now we have both monetary chaos, debt soaring, and industrial hunger. Even in slowdowns, demand persists. For tech, defense, silver is no longer just speculative, it's vital. Money supply tells more. 1980's M2 was 1.5 trillion. Today's over 21 trillion, 14 times larger. If silver matched that growth, it'd exceed $300. Suppression kept it low, but cracks show. Recent rallies signal the end. Then the gold-silver ratio, gold at 40.49, silver at 71.91, 62.1. Nature's ratio is 8.1, history's 15.1. In 1980, it hit 17.1, 2011, 31. Back to 31, silver doubles to $150. To 17.1, $263, and gold's rising too, silver amplifies it. Geopolitics adds fuel. 1980's Cold War was contained. Today's fractures run deep. Nations trade outside dollars, stockpiling metals. If silver remonetizes, demand surges. Central banks buy quietly, India, Russia, seeing it as secure wealth. Chapter 4, the inelastic trap and modern myths. Dig deeper, modern silver use is inelastic. In a $1,000 phone, silver's pennies worth. Triple the price, cost rises negligibly, production rolls on. No pain threshold hit yet. Industries absorb 500 plus if needed. 1980s photography bent to prices, today's energy can't. Investment demand? Still nascent. 1980 had public frenzy, now most ignore silver. Smart money, funds, offices, buys first. Mania comes later at 100 plus. Recycling? 2011 saw surges from jewelry, now low-hanging sources depleted. Electronics yield little economically. Supply stays tight. Mining? Grades dropped from 20 ounces per ton to 4. New mines take a decade. Supply lag ensures a super cycle. Debt? 1980's $900 billion, now $36 trillion. Repression, low rates versus inflation, favors metals. Silver's anti-debt, no liabilities. Short squeeze? Paper claims outnumber physical hundreds-fold. A delivery run could shatter exchanges. Physical premiums already show. Coins cost $85.90, not $71. Solar mandates lock in demand. Legislated, unavoidable. Chapter 5. Global shifts and psychological anchors, 1980. U.S. dominated, crushed the squeeze. Now, China consumes industrial silver. India stacks investment. Mines in Mexico. Peru resist Western control. East sets prices, strategic, not speculative. True inflation. Shadow metrics suggest $900 adjusted peak, not $175. Silver's finite like Bitcoin, but industrial too. $50 anchor broken. Psychology shifts from fear to FOMO. No ceiling means momentum builds. Paper physical gap. Like musical chairs, shortage exposes fragility. Veblen effect. Higher prices draw more buyers. Inverting norms. Miners lag but poised. Cash flow's huge at $72. Structural bull. Low grades, high debt, inelastic demand for his 1980s opposites. Chapter 6. Exit strategies and the long game. Don't measure in dollars, use ratios. Gold, silver at 62.1, target 40.1, watch 31, swap 20%, 15.1, exit fully. Swap to gold land. Dow silver 630, 0.1 now. Reversion could push silver to 450. CBDCs threaten privacy. Silver's anonymous premium grows. Institutions wait. Market too small, price must rise for entry. Substitution? Copper for solar takes years, bull intact. Energy ties. Higher oil lifts mining costs, silver floor. Endgame, 107 to CPI, $300 ratio, $900 shadow, 71 start. Recalibrate. Think like a bank. Hold through chaos. History resolves. Silver's your shield.